Everyone's chasing alpha, meme stocks, AI booms, crypto swings. But in that chaos, true wealth is built differently. While the noise distracts most investors, I quietly locked onto an ETF that doesn't just ride trends, it defines them. I'm talking about SCHG, the Schwab U.S. Large Cap Growth ETF. In a world where long-term compound growth is the only true edge, SCHG has emerged as one of the most powerful tools in my portfolio. Why? Because it gives you direct exposure to America's most dominant companies, the titans of innovation, scale, and disruption, without needing to handpick winners. It's like buying the entire tech growth elite with one move. I didn't buy SCHG for speculation. I bought it because it represents relentless growth. It's a forward-facing machine that captures the best of what capitalism produces. Businesses that innovate, adapt, and lead markets decade after decade. When the world is panicking about inflation, elections, interest rates, or economic slowdowns, SCHG keeps working. While retail traders are glued to Reddit and CNBC trying to time their next breakout play, SCHG is quietly compounding wealth inside the portfolios of patient strategic investors. It doesn't need hype. It doesn't need a media push. Its results speak for themselves. Think about this. The average investor spends years trying to find the next Apple or Amazon, poring over earnings reports and technical charts. SCHG simply owns them. It doesn't just invest in growth. It curates growth, captures growth, and scales growth over time. Whether it's semiconductors, cloud computing, digital advertising, e-commerce, or AI, SCHG is there. And because of that, I'm there too. This isn't a get-rich-quick scheme. This is a get-rich-for-sure strategy built around owning companies that are already profitable, already dominant, and already changing the world. SCHG gives me that access in one low-cost, tax-efficient, set-it-and-forget-it package. To me, SCHG is more than an ETF. It's a philosophy, a quiet, compounding, future-proof monster that keeps building momentum year after year. It's the part of my portfolio I never worry about, because I know it's filled with the kinds of companies I'd want to own, even if the market closed for the next 10 years. That's why I bought SCHG, not because it was trending, but because it will still be growing, long after the trends fade. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button, and don't forget to turn on the bell for updates on all our latest content. What is SCHG and why it matters? SCHG tracks the Dow Jones U.S. Large Cap Growth Total Stock Market Index, giving exposure to around 240 of the largest U.S. companies with strong growth fundamentals. Unlike dividend ETFs that prioritize income, SCHG is laser-focused on capital appreciation. That means it hunts for firms with above-average earnings growth, revenue expansion, and long-term potential to scale. If you believe in companies like Apple, Microsoft, Amazon, Nvidia, Meta, and Google, SCHG is your all-in-one exposure. These aren't just growth stocks. They're cultural and technological pillars. SCHG doesn't just invest in the future, it is the future. My reasoning, growth over income. I already own dividend-focused ETFs for passive income, but I wanted something to accelerate my wealth. SCHG fits perfectly. It doesn't pay a meaningful dividend, under 1%, but that's intentional, because every dollar is reinvested back into the business for expansion. These companies don't cut checks. They create value through innovation, buybacks, and scale. This ETF is a growth engine. Over the past decade, SCHG has delivered stellar returns, consistently outperforming broader market indices like the S&P 500 in bull markets. Its design rewards patience, especially for long-term investors like me, who understand that compounding is a time game, not a luck game. a portfolio of titans. SCHG's top holdings are a who's who of elite American innovation. We're talking Microsoft, cloud, AI, enterprise software; Apple, hardware, ecosystem, brand loyalty; Nvidia, the AI infrastructure king; Amazon, e-commerce, AWS, logistics mastery; Alphabet, Google, search, ads, YouTube, AI. These aren't hype stocks. They are companies with deep moats, immense cash flow, and global dominance. Even mid-tier holdings in SCHG, like Adobe, Salesforce, Tesla, and Broadcom, are in markets they largely control. By owning SCHG, I'm not gambling. I'm partnering with the world's most effective businesses in a structure that requires zero maintenance and maximum upside participation. SCHG's silent advantage: passively active. While actively managed funds charge 1% plus in fees and try often unsuccessfully to beat benchmarks, SCHG offers a low-cost solution with elite holdings. Its expense ratio is only 0.04%. That's nearly nothing, especially when compared to mutual funds or robo-advisors. But make no mistake, even with passive management, SCHG evolves constantly. The index it tracks is refreshed quarterly, ensuring that underperformers are replaced by rising stars. This silent churn means the ETF automatically adapts to the future. When new growth companies emerge, like the next Shopify or Palantir, SCHG adjusts. You don't have to lift a finger. Why I chose it over QQQ. A lot of investors flock to QQQ, the NASDAQ 100 ETF, for growth exposure. And yes, QQQ is solid, but SCHG has some key advantages that made me go with it. Broader diversification, 240 plus holdings versus QQQ's 100. Lower expense ratio, SCHG 0.04% versus QQQ 0.20%. More balanced exposure to mega-cap and mid-cap growth. Less concentration risk. QQQ is top-heavy with just 10 stocks making up over 50% of the portfolio. SCHG gives me more exposure without the extreme volatility. It's a quieter, more calculated growth vehicle. That balance is exactly what I wanted. Riding the AI wave without the hype. Artificial intelligence isn't just a buzzword anymore. It's the next industrial revolution. SCHG has massive exposure to companies leading the AI wave. Nvidia, Microsoft, Amazon, Google, Meta, all embedded deeply in its portfolio. Instead of betting on small-cap AI startups, I chose SCHG because it gives me exposure to the infrastructure of AI. These are the companies building chips, running the clouds, training the models, and integrating AI into billions of users' lives. By holding SCHG, I'm investing in AI without the individual stock risk. That's how you surf a trend, not with guesswork, but with strategy. The power of long-term compounding. Growth investing isn't about what happens in the next 3 months. It's about what happens over the next 3 decades. SCHG thrives when held over long-time horizons. Every correction is an opportunity to buy more at a discount. Every earnings beat fuels future returns. Just look at SCHG's 10-year return. It's crushed traditional value ETFs. It's averaged well over 12 to 15% annually, depending on time frame. And that's with recessions, corrections, and pandemics in the mix. I'm buying SCHG like I plant a tree, slowly, steadily, and with the patience to let it grow into something massive. Tax efficiency and account strategy. Although SCHG isn't a tax nightmare, I hold it in my ROTHIRA. Why? Because I want to maximize my tax-free growth. A growth ETF with minimal distributions plus decades of compounding equals massive tax-free potential when held in a Roth. But even in taxable accounts, SCHG is relatively tax-friendly. It doesn't churn heavily, and the lack of dividends means fewer taxable events. This makes it one of the best ETFs for compounding without interruption. SCHG in my portfolio strategy. SCHG is my core growth allocation. I pair it with SCHD for dividends and VX U.S. for international exposure to create a diversified, global, balanced portfolio. SCHD equals income and quality. SCHG equals growth and capital gains. VX U.S. equals global diversification. This triple play portfolio keeps me exposed to all corners of the market. But if I had to bet on just one ETF for long-term explosive potential, SCHG would be it. Why I keep buying? Every paycheck, without fail, I automate a portion into SCHG, regardless of what the market is doing. When headlines scream recession, I buy. When stocks are at all-time highs, I still buy. It's not about timing the market. It's about time in the market. This disciplined strategy, known as dollar cost averaging, has become the backbone of my investment plan. It removes emotion from the equation. It frees me from overthinking. And most importantly, it builds wealth, quietly, consistently, and automatically. There's something deeply powerful about automation. By making the decision once to keep buying SCHG no matter what, I've created a system that runs on autopilot while I focus on living my life. I don't need to guess when the next dip is coming. I don't need to second-guess my strategy. I know that over time, I'm collecting shares of the most innovative, world-dominating companies at every price point, and that's how real wealth is built. Not in perfect trades, but in persistent ones. SCHG isn't a one-time trade for me. It's a permanent position. It's a pillar in my portfolio, a bet on American ingenuity, technological dominance, and long-term innovation. But more than that, it's a bet on myself, on my ability to stay consistent, to drown out the noise, and to trust a process that has proven itself over and over again. When I buy SCHG, I'm not chasing the next big thing. I'm compounding into greatness. I'm aligning myself with the businesses that build the future, not for a quick flip, but for a lifetime of growth. I know there will be pullbacks, corrections, and volatility. That's expected. That's welcomed, because every dip is a discount. Every red day is a chance to accelerate my future returns. So why do I keep buying? Because I've stopped trying to predict the market. Instead, I'm partnering with it. And with SCHG, I've found a growth machine I trust to carry my capital, my conviction, and my future forward. SCHG is my growth monster. I bought SCHG because I wanted to ride with winners, not just hope for returns, but actually partner with the most dominant companies in the world. These are not speculative small caps trying to prove themselves. These are companies that have already conquered markets, rewritten industries, and are still charging forward with relentless innovation. With a dirt-cheap fee, elite performance, and a hand-picked portfolio of unstoppable businesses, SCHG is a monster growth ETF, and I don't use that term lightly. This ETF is built for investors who want to stop guessing and start growing. It strips away the noise. No earnings call drama, no quarterly hype cycles, no Twitter-fueled pumps. Just pure exposure to world-class corporations with a track record of long-term success. When I buy SCHG, I'm not buying hope. I'm buying execution. I'm buying scale. I'm buying the infrastructure of the modern economy: cloud platforms, semiconductors, AI, e-commerce, and digital dominance. In a world full of distractions and fads, SCHG gives me clarity. It reminds me that building wealth doesn't require complexity, it requires consistency. Every time I look at my portfolio, SCHG is that silent workhorse. It doesn't need daily attention. It doesn't ask for praise. It just delivers through thick and thin. And that's powerful. It offers long-term potential with short-term resilience. When the market crashes, I hold. When it rallies, I ride. That's the beauty of SCHG. It gives me the conviction to stay the course, even when fear is high and sentiment is low. I know what I own. I know why I bought it. And that's what separates me from the average investor. I didn't buy SCHG to get rich overnight. I bought it to build real wealth, quietly and powerfully over time. Because true wealth isn't built in one wild trade or one lucky breakout. It's built over years through the power of compounding, through disciplined investing, and through staying connected to businesses that shape the world. SCHG is my growth monster, not because it shouts the loudest, but because it performs the hardest, the longest, and the most consistently. It's my quiet juggernaut, my forward engine, my hedge against missing out on the future. And in my book, that's the most unstoppable monster of all. Thank you for watching Wealth Echelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.